Cloudflare, one of the leading players in the global cloud infrastructure market, has just released its latest earnings report. But what do these numbers actually mean for the future of NET stock? Is it time to buy, hold, or sell? Let's break down the key takeaways from Cloudflare's quarterly results and discuss how investors should interpret the data. Whether you're a seasoned trader or new to the game, understanding Cloudflare's financials could be the key to making smarter investment decisions. Before diving into the earnings report, let's briefly revisit Cloudflare's core business model. Founded in 2009, Cloudflare is a web infrastructure and security company that provides services like DDoS protection, content delivery networks, CDN, and internet security to businesses of all sizes. Cloudflare's aim is to make the internet faster, safer, and more reliable. Their software platform includes solutions that help companies manage performance, security, and reliability of their web infrastructure. This has made Cloudflare a go-to for enterprises and startups alike. Key metrics to understand. Revenue growth. Market share in cloud infrastructure. Service offerings, e.g., CDN, security services. Industry leaders, e.g., AWS, Microsoft Azure. Now, let's take a deep dive into Cloudflare's latest earnings report. For Q1 2025, Cloudflare reported a revenue of $395 million, up 35% year over year. But what's behind these numbers? Is it just strong revenue growth, or are there other metrics we should be paying attention to? Revenue. Cloudflare's revenue growth is significant at 35%, but we need to see whether this momentum will continue. Net income. Cloudflare reported a net loss of $30 million, a slight improvement from last year's loss of $35 million. However, this shows that despite revenue growth, profitability remains a concern. Gross profit. Their gross margin stands at 78%, which is impressive and indicates that their operational efficiency is strong. EPS, earnings per share. Earnings per share were reported at minus $0.1, reflecting the continuing challenge of balancing growth with profitability. What's driving Cloudflare's impressive revenue growth? The company continues to expand its customer base, increasing the number of paid customers to 200,000, a 20% increase from the previous quarter. This is partly due to the increasing demand for internet security solutions and the growing trend of companies migrating to the cloud. Cloudflare's customer base. Enterprise customers contribute to over 50% of Cloudflare's revenue. The average revenue per user, ARPU, has grown, signaling that larger clients are committing to Cloudflare's platform. Product expansion. Cloudflare's product offering continues to evolve. New products like Magic One, which provide secure SD-WAN solutions, are gaining traction. Additionally, Cloudflare's entry into the edge computing space is positioning the company to benefit from a growing trend in distributed computing. Strategic partnerships. Cloudflare has also made strategic partnerships with major players in the tech industry, including Microsoft and Google, to enhance its cloud offerings. Despite impressive revenue growth, Cloudflare has yet to achieve consistent profitability. The question many investors are asking: what's standing in the way of profitability? High operational costs. Cloudflare's operating expenses have been high due to heavy investment in research and development, R&D, and sales and marketing. The company is focused on growth and customer acquisition, and while this strategy may pay off in the long term, it's eating into current profits. Competition. Cloudflare faces stiff competition from giants like Amazon AWS, Microsoft Azure, and Akamai. These companies have more resources to invest in innovation and can offer similar products at scale. Despite its strong growth, Cloudflare will need to continue expanding its customer base to maintain its market share. Investors' expectations. Investors are looking for Cloudflare to reach profitability soon, especially given its increasing revenue. However, investors also understand that this transition may take time. Now, let's take a look at how Cloudflare's earnings report impacts the stock. Cloudflare's stock price has been volatile, reflecting both the market's excitement over its growth prospects and concerns over its ability to turn a profit. Stock performance and analysis. Cloudflare's stock has seen a 10% increase in the past quarter following strong revenue growth. However, it still faces downward pressure due to its continued losses. The stock price has also been impacted by broader market conditions and investor sentiment towards tech stocks. What analysts are saying. Several analysts have a hold or buy rating for Cloudflare with a 12-month price target of $120, indicating room for growth, though at a moderate pace. The analysts believe Cloudflare is well positioned to capture market share in the cloud and security sectors, especially if it can maintain its growth momentum. Risk versus reward. For long-term investors, Cloudflare presents a high-risk, high-reward opportunity. If the company can turn its investments into profit and expand its enterprise customer base, there is significant upside potential. After analyzing Cloudflare's earnings report, what can investors take away? The company's strong revenue growth and impressive gross margins suggest that Cloudflare is a leading player in the cloud security market. However, its struggle to turn a profit and the heavy competition in the space present risks for investors. Buy, hold, or sell. For investors seeking stability and short-term gains, Cloudflare might not be the right fit, as the company is still not consistently profitable. For long-term investors with a higher risk tolerance, Cloudflare offers significant growth potential, but patience will be key. For those interested in cloud security and web infrastructure, Cloudflare remains a solid bet, but it's crucial to monitor their financial results in upcoming quarters. Cloudflare's earnings report offers a mixed bag, strong growth, but persistent challenges with profitability. As always, make sure to conduct your own research and consult with a financial advisor before making investment decisions. We'll keep you updated on the latest news in the world of tech stocks, so be sure to like, share, and subscribe to stay informed.